That U.S. China trade talks remain at a standstill, and that's because of Huawei. Now, the Trump administration is unsure about how to meet Beijing's demands when it comes to easing restrictions on the Chinese telecom giant, and it's stalling progress. This is all according to a new report from the Wall Street Journal. Joining us now is Lori Heinel, State Street Global Advisors Executive Vice President. And Lori, thanks so much for joining us today. When you take a look, this is a big reason why we aren't really seeing any upward momentum in the markets today. How worrisome should this be for investors?
Well, the backdrop about U.S. China trade relations has been a backdrop for quite some time now, and we've been of the mind that they will eventually strike a deal. There will be some ongoing back and forth around what that looks like. But in some sense, we've got to get used to uncertainty for the foreseeable future around this topic, because there are lots of nuances, as you described, that can derail any particular part of the negotiation. What we think is actually more important in the moment in the markets is the follow-through on earnings. And one of the things that we are looking for is whether the earnings sustainability is there, because that's what we ultimately need to catapult markets higher.
Do you think the sustainability is there? I mean, so far we've actually gotten relatively strong reports in regards to what the expectations were, but there's lots of talk about whether or not that momentum is going to continue this quarter.
Well, certainly there are pockets that are a little bit vulnerable in here. Any interest rate sensitive sectors, for example, you think about the financial centers, they've had a little bit of challenges, particularly as we look at the Fed potentially cutting rates next week. There are other places where we've seen the multiples get ahead of the earnings. And so, again, looking for confirmation. I think the good news here is that the market has sort of reset what they're looking for from corporate earnings. And so there is the opportunity that in the aggregate, the S&P could outperform. But there is going to be a lot of lumpiness, and people are going to be looking for forward guidance from here.
Lori, any sectors that you're favoring in this time, not only because of earnings, but because of the latest on trade, and then what you were just talking about, the potential rate cut here at the end of the month?
Yeah, generally speaking, we've been looking at more defensive sectors. So think about healthcare. Now, healthcare has been a little bit of a mixed bag because of some of the back and forth politically. But as a sector, we see pretty good opportunities there, and there is sort of sustainable demand and sustainable growth there. Selectively in financials globally, we think they've been kind of beaten down. So in some cases, the share prices have been beaten down to a point where even with that vulnerability, we think there's good value there. Certain utilities here, again, you got to be a little bit careful because of the interest rate risk there. But then, consumer still, especially when you look here in the U.S., consumer health is quite strong. Employment is still very, very good. And so there are places where, again, for a discriminating investor, you can find some good values here.
Lori, we got a piece of U.S. economic data out that grabbed investors' attentions this morning. Philly Fed and factory gauge rebounding by the most in a decade. When you take a look at that number compared to the fact that the Fed is signaling that it will cut rates at the end of this month, is that starting to kind of poke holes in the Fed's future plans? I mean, should the Fed really be considering a rate cut at this point?
We have a lot of debate on this topic, and I can tell you, even within our own shop, there are people who are in different camps around this one. Our base case, though, is that the Fed has signaled pretty strongly that they're going to reduce rates next week. We think it's going to be 25 basis points, not the 50 basis points that some are saying. And we think in some sense it's the right move, given that the December hike probably wasn't necessary. So yes, we agree that some of the data is coming in a little bit stronger. We saw 3-month retail sales a while back being the highest since it's been in 2003. So there are a number of things, particularly related to the consumer sector, that look pretty good. But we think that the Fed is, has been signaling that they are going to look at other things beyond just U.S. economic health, including things like trade and the kind of global situation. So we think there's a high likelihood the 25 basis point cut comes next week.
Yeah, Lori, I wanted to ask you, just in terms of when they're trying to weigh what exactly is going on, when they're looking at the U.S. economic data, also looking at some of the geopolitical risk, namely trade, how do you think they're weighing that as of right now?
Yeah. Well, look, it's been pretty interesting how they've laid out a variety of different things that they are looking at. So certainly the current economic data, and that's something the Fed has been focused on for many years now. What's the trajectory of that data, and how does that influence their decision making? There's also been a lot of discussion about what's going on globally, and trade in particular, how it feeds back into that kind of core economic underpinning. But the other thing that has been even more pronounced over the last couple of months has been this idea of what is the right structural long-term equilibrium rate. And we've thought for a while that it's lower than what many prognosticators think. And so that has started to factor, we think, even more broadly into how the Fed is thinking about where the equilibrium rate might be.
All right, Lori Heinel of State Street, thanks so much for joining me today.
Thank you.
Well, make sure you stay tuned to Yahoo Finance tomorrow. We have a big exclusive interview with the CEO of Huawei. Again, that's coming up tomorrow right here on Yahoo Finance.